Welcome, ladies and gentlemen, dear traders around the globe. We from Admiral Markets say welcome to our real-time daily trading idea webinar. In this webinar, we have 5 different traders on 5 different days. So on each day, we have a different trading style here to show us some interesting trading setups, discussing the topics of the day at the markets, and for sure answering here your questions. But first of all, please be aware of our disclaimer. So Forex and CFDs are complex instruments and come with high risk and losing money rapidly due to the leverage. So please be aware of this, and all we are showing and presenting here is just a personal opinion of our traders and not an advice for investing. So if you already heard of this, ESMA regulation are already started since the 1st of August this year, 2080. So the leverage for retail clients is reduced of only 1 to 30 of maximum for major Forex pairs, and also 1 to 24 so indices and commodities. If you would like to do the professional client, here you have some options that you can see. Also, if you like to get more information about this topic and your options for a trade with a higher leverage, please check out our website or contact our customer service. You can see a picture from me. My name is Tim Temp. I'm an account manager from Germany. And we do this webinar always in co-moderation. So today we have the pleasure with Paul here. Paul will discuss the topics of the day and also show us some interesting trading setups in a couple of moments. So here we have a quick overview of some of our offerings. For example, here our DAX 30 with a typical fixed spread of only 0.8 points during the main trading hours. These and other products you can also trade in mini contracts on different platforms like the MT4 and the MT5. Yeah, on the right side you can see some of our awards for our products and customer services. So you can feel free here to contact us if you have additional question or anything. Here you can see our contact data, and these you will find also on our website. A special advice here, please check out our YouTube channel. We have a lot of videos producing the last years. So also this webinar is a live trading webinar and it's recorded, and later you can find it there. So here's a picture from Paul. And in this case, I'm finished with my introduction here. Good morning to you, Paul. You have the screen and you can start.
Good morning, Tim. Good morning, everybody. I hope you can all hear my voice. I hope you can all see my screen now. So yep, as I said, good morning, everybody. It's here we are on Tuesday, the 11th of September. It's a rather it's a rather poignant day, as I'm sure you'll all know. Sort of 17 years on from a day that probably changed. The world's changed and has had a huge impact upon let's call it our generation. And so that will have a little bit of a knock-on effect to American markets, I believe today, and I'll touch upon that later. But as always, we've got lots to go through. It's we covered a few things last week, and I've got a few things to sort of draw your eye towards. So opportunities for you for this week. I know that there's a few questions there, sort of lining up on for me to have a look at a few things, and thank you for that, Eric. And I'll be very happy to do that as part of what we go through. So very quickly, just one of the sort of the setups we talked about last week was Ethereum against the US dollar. If you remember it last week, I was saying it was sort of setting up as a bit of a coil, a bit of a triangle playing out on the daily chart. I said that we were in a downtrend, and the classical analysis is that you'd expect the trend to continue, but you also be ready for a shock move the other way. Well, what we saw was that invariably the trend is your friend until the end. We had a coil. That sort of day, the Ethereum broke down to the downside, and we ran all the way down nicely to the sort of the 200 number. So if you're in that trade, I'd be watching just to see how price is just bubbling along there underneath the $200 mark, and I suspect it's probably just coiling up again to get it ready for its next move. So it's just a quick update on last week, but let's have a look at what's going going on this week and what we can have a bit of a look at and take some interest in. So those of you who know me, or those of you who join us for the Monday afternoon Mastering the 4Ms of Trading, okay, who talk about, primarily most of my work is in FX markets, so that's where my particular sort of focus and love is, and so with that, within FX markets, I always want to know what the dollar's doing. Okay, so we talked a little bit about it this week, and I'm just going to draw your attention to something here as well. For those of you who are joining us for the first time, or you're new to trading, okay, I appreciate we have a very broad spectrum of experience in the room, but what I have here is my charts are very simple: green bullish candles, red bearish candles, blue 20 simple moving average, a red 50 simple moving average, and a green 200 period moving average. I also have some fractals on there, and I will also draw in horizontal levels of support and resistance, and any particular patterns. If you want to know more about that, as I said, please feel free to sort of to join me on the Monday afternoon Mastering the 4Ms of Trading webinars from 4 o'clock London time, or you can catch them on the Admiral Markets YouTube channel and Facebook page. But last week I talked about here on the Dixie, this is the weekly chart. I love the weekly charts. Is that I talked about, how we'd had a little bit of a sort of an evening star formation show up on a weekly chart, which is normally a bearish position, and I wanted to see how the market was reacting. And what we've had is we've just actually had a little bit more of a coil. Hopefully you can see there, and it's one of the things I talk about is that the moving average there has acted as as a good lever of sort of dynamic resistance there. And more importantly and more interesting for me is when I go down to the daily chart here, okay, which is what I can see. What I'm seeing here is that I'm seeing once again prices coiling up here, and it has been for the last week or so. Just take a look at that. That's the daily 20 period moving average at the red 50 simple moving average around this 95 level, which you've heard me talking about for weeks and months now as as a significant level. And that's what we're seeing here. What I can see here is that price just can't get above and close above that daily 20 period moving average, and also each of the highs is lower. We're getting lower highs, but then also we've had the sort of the 50 period moving average underneath acting as dynamic support. So I personally see that is price coiling up, getting ready to make the next dollar move. If I go down to the 4-hourly chart, well, I can probably draw in a trend line here, okay, to the top, but it's just really it's intimating what what we sort of just talked about. I'd probably want to see another point on that sort of supporting trend level there beneath. But the kind of the message is, the dollar is winding up. Okay, the dollar is winding up, and we're getting ready to see, are we going to see continued dollar strength for the remainder of the year, which is what people would be expecting, or are we going to actually see a little bit of a rollover, and that will have a knock-on impact to one or two of the other currencies that I wanted to sort of take a little bit of a look at. But so just that at the moment we're just in a kind of as I quite often say, like a watch and shoot phase on the dollar at the moment, which is I'm watching it. Okay, I'm watching it, and I'm prepared for it. And when the market gives me a signal, then I'll be ready to shoot my trade. Okay, and sometimes we have to demonstrate a little bit of patience. So add that to your watch list. Okay, just see how that unfolds over the next few days, because of course whatever the dollar does, that is going to have a huge impact upon the other currencies. So I think that I wasn't going to particularly look at it today, but I think Eric asked me to very quickly look at euro, so we will just very, very briefly have a quick look at euro there. So for those of you who are new to trading, okay, the dollar index is the dollar against a basket of currencies. It's made up about 57-58% by the euro. So it's not unusual to see the euro dollar chart to be almost like the sort of a direct inverse of the dollar chart. And I talked about that last week. Whereas on the dollar index we had a evening star on the weekly formation on the weekly chart. Here we have a morning star formation on the weekly chart. But a bit like the dollar index chart, it's just doing the same there. It's just it's sitting above 115. Okay, it's just getting a little bit squeezed. And if I go down to the daily chart, okay, once again we've got the 20 period moving average has been acting as a bit of dynamic support here, and that's one of the things I talk about in the mastering those 4Ms of trading. And we've had a little bit of if we look at the highs there, they're getting lower highs there. So once again, Eric, I'd be seeing that there's a squeeze going on. We're getting ready for it to explode. So it's just a little bit of patience required at the moment, okay, just to sort of keep on top of that. I know that a lot of people like to sort of trade the sort of the DAX, but before I do that, I'm just going to very quickly look at the Nasdaq. I said earlier on to just at the start of our session that that what we were looking at is it's the day of 9/11, and of course that is it's an emotional day. Okay, there'll be lots of people, especially within the finance community on the institutional side, who will have very vivid memories from that day. Especially if they were working in New York, Wall Street, and the World Trade Center. And that has an impact upon people's bias, how they see that. The Americans are a very proud people. They're a very bullish people. Okay, and on days like this, it makes them, there is an element of remembrance, but also an element of being pride in terms of their nation and what they've done, and that sort of feeds through into sort of trade ideas. Okay, and what I particularly look at. So here we go. This is the Nasdaq on the daily chart. Okay, and hopefully you can see that has been in a lovely uptrend. Okay, we reached recent all-time highs, and we've come back here, and we're once again we're kind of caught between that sort of daily 20 and the daily 50. We're caught there where we're coiling up. Okay, we're absolutely coiling up. Okay, and if I go down to the 4-hour chart, well, I'm looking at that we're also around here on the 200 period moving average. The last sort of 4 or 5 sessions has been a little bit just a little bit of a messy session, but I would not be surprised this afternoon session if we see a little bit of a bullish reaction. Okay, we see maybe a little bullish reaction, so I'll be looking this afternoon around about that sort of 74.40, okay, 74.50 area to see if as we get into the opening of the US session, where we got some bullish signals for maybe a sort of a run up to the that sort of 4-hour 50 period moving average around about the 75.60 level. So run from about 70 from about 75.45, 75.50 up to about 75.60. Okay, just based upon just waiting to see if we get some nice bullish formations there around the sort of start of the US session. It's it's a case of, as I said, the Americans are they're a very genuine and very bullish people. Okay, and that kind of bias will feed its way into trading decisions. So I wanted to have a quick look at about oil as well. Okay, bring your attention to that. All right, and just have a little look at some ideas for us in terms of trading. I talked about how this is, once again, it's the weekly chart, and talked about how we're in a once again we're in a nice uptrend. Okay, nice uptrend sort of we've been on that weekly chart, but I've been talking about how that expecting perhaps a possible sort of running out of steam. All right, I've talked about how we kind of fell away from those highs, and we pushed up, and I wanted to see a move up to around about 72 in the effort to hopefully maybe create a sort of a weekly head and shoulders formation. I'll just quickly draw that in. I appreciate some people might not necessarily fully understand what that actually implies, but here we have, this is just quickly drawing it in here, and we'll keep this here. So there I have the left shoulder, there I have the sort of the head formation, okay, at the top. And what I'm intrigued and interested in, okay, on the weekly chart is are we creating a right shoulder here? Okay, if I just change that, so hopefully you can all see that there. Hopefully that's you can see where we go. So, we have a little bit of as I said, a little bit of a right shoulder forming there, and what gives me some sort of confidence in there is, look at that weekly candle we've seen. Okay, there's a big sort of bearish engulfing candle. Okay, it's a key reversal candle as well, in the sense that we pushed to new highs, but we closed. Okay, we closed right beneath the lows of the previous weekly candle. There's a shift in momentum. Okay, there's a shift in momentum, and so some people would probably look to maybe short the break of the low of that of about 67.20. Some people might want to wait and see a sort of a break of a possible neckline around about the 64.70. But what I appreciate is that the sort of the weekly candle, it's a big candle. So in terms of trade risk, that can be in terms of trade risk, that can be quite large. So what I like to do is I like to sort of break those things down. Okay, I like to break it down and start to take a little bit of an interest in where there might be opportunities for me to get involved. And what I often find is that, quite often we moves like this, and I've talked about it in the past, is that sometimes, we get a, the price will have a little bit of a retrace before it makes its next move down. And sort of I'm just drawing in there that kind of area around the kind of 50, all right, so sort of 50%, 62% retracement of that candle. So in the region of $69.50 to $70, all right, that I'm going to be looking at that for the rest of this week to see, can price move up towards that area? If I go down to the 4-hourly chart, can price actually move up to that area? Okay, and if it does, and then starts to put in bearish price formation, so maybe it's an evening star, maybe it's a rejection candle, maybe there'll be a little 4-hourly key reversal, maybe there'll be an engulfing candle, a bearish engulfing candle. Okay, if that happens there, well then I'll be actually looking to sort of take a trade in that place, a bearish trade. Okay, and that's what that allows me to do, is that allows me to use the 4-hour chart, okay, and a much tighter trade risk to actually to get on board what could be a much bigger move off the weekly chart. So once again, add that to your watch list for the remainder of the week. As I said, it's only if it gets up there and starts to put in some of those good reversal patterns, then I'll start to be intrigued, and I'll be getting ready to sort of to place my trade on that. So as I say, add that to your watch list, and we'll keep an eye on that over the next few sessions and the next few weeks. So we've done Ethereum, we've done dollar, we've done euro. Okay, we've done just done oil. And what I wanted to have a look at is, we talked about the last 2 weeks about the strength in the Swiss franc, and we've had strength in dollar and Japanese yen as well. But for those of you who will know me know that in FX markets, I'm always looking to sort of buy strength and sell weakness. And for somebody to be strong, there has to be somebody to be weak. And that at the bottom of the pile for the last few weeks, in fact for the last couple of months, has been the Kiwi dollar, and over the last couple of weeks the Aussie dollar. And here I have, as always, I talk about I have a profile set up on the Admiral Markets MetaTrader 4 platform. I have a profile for each of the major currencies. This is the Aussie dollar one, and we can see I've got it all on the daily charts. So I've got Euro Aussie, Pound Aussie, Aussie Canadian, okay, Aussie Kiwi, Aussie Swiss, Aussie Yen, and Aussie against US dollar. Hopefully you can see that has actually just that's giving you quite a clear example there of how weak the Aussie dollar has been. And there's been some really lovely trades on that over the last few weeks because there's been a nice trend, there's been a trend move. You look at, for example, Aussie Swiss, all right, what we have seen there, okay, is just a very clear example of Aussie being very weak, the Swiss franc being very strong. So what we've seen is, really of the last sort of, last couple of months is actually just a lovely downtrend. Okay, and that's in FX markets, that's just what I'm trying to do. I'm just trying to buy strength and sell weakness. And when you get a trend like that, that's part of it that you want to have a look at. So as I say, if you're not already sort of trading that on the short of the Aussie, then add that to your watch list. And it has, it kind of pulls us in just to finish up. It pulls us into conversations. We've touched on dollar, we've touched on oil, we've touched on Aussie. They all have an impact around, we all have an impact around, the US dollar. We have an impact about commodities. And so let's finish up with a look at gold. All right, so gold and Aussie, they're commodity dollar. It's a commodity dollar currency. There's a real link to it. And so actually what it's no surprise that we've seen Aussie weakening, we've seen gold weakening. Okay, and you can see that's been a lovely uptrend. And if you remember, a few months back we talked about that break of there. We broke out of the zone. We had a sort of a break of the counter trend line, and we're looking to have shorts runs. I was talking around 1205, 1200 was always an interesting level. We had a good push beneath it. But what I'm looking at here now, ladies and gentlemen, as I said, just to add this to your watch list, is effectively, I see price coiling up there on the daily chart. If we go down to the 4-hourly chart, you can see that there. What we have is that 4-hour 200 period moving average there is acting as very nice dynamic resistance. Okay, it's touched it 3 times, and what we have is we've got a sort of supporting level there. Now, what we'd be saying is that, the 200 period moving average has acted as nice dynamic resistance. We are in a downtrend, and actually, don't be surprised if we see, a break and a continuation of that. So it's a case of, if we see breaks and closes, I'd like to see it maybe come up, even test that line before it moves back down to those recent lows of around 1165. So I'd be just keeping an eye on that prices. As I said, that gold price is coiling up, getting ready to move. So, as I said, we can see, oil is, getting ready to move. Dollar is coiling up, getting ready to move. Gold is coiling up, getting ready to move. Things are getting ready to sort of to move and to shake out. Okay, and that's not unusual. When we come back in September after a bit of the summer lull, then we can. We get it's not unusual for the markets to sort of to coil up as they get ready to make their moves towards the end of the year. So we've overrun just a little bit, but as I said, I wanted to get through a lot, and I know Eric and a few other people wanted me to have a look at DAX. So I'm just going to very quickly look at DAX, okay, very quickly, because it's we've had some joy on the DAX, okay, over the last few weeks. Weekly chart, we're back down to 11,900 level. We had a real good sell-off last week, okay, the last week or two. We can see we're down there. What I'll be looking at here, the daily chart. I want to go down to the sort of shorter time frames, and here we go. This is, we've actually pushed down to here to that 11,900 level again, which has acted as support in the past. We saw that actually put in really an inverse head and shoulders there before it moved off. But we can see after some of the data's coming out today, we can see we've had a real strong fall down there. What I'd be looking for is, once again, I'd be liking to see if we get a double bottom there. Maybe if there's a double bottom, okay, if there's a bit of a 1, 2, 3 formation, a little bit of a sort of a basing there, I'd be looking to sort of maybe be a buyer on a short term up to about the sort of the 1200 level. Okay, there's 100 ticks there, but as I said, I'd be just watching to see how that price action develops over the next session. We've had news out at 10 o'clock. So there you go, Tim. We flew through quite a lot there, sort of trying to cover as much as we can. As always, I wish you the very best success in your own trading, ladies and gentlemen. Those of you, you're very welcome to join me on the Monday afternoon Mastering the 4 M's of Trading session at London 4 o'clock. Wish you the best success, and I look forward to seeing you next Tuesday, traders.
Paul, can you hear me?
Yes, yeah, I can hear you.
Yeah, sorry,
I can hear you now.
I had short connection problems here. So you are finished, or?
Yes, yep, I've finished. I've flown through a whole host for people today, so
Okay.
I've given them lots to look at.
Yeah. Okay, Paul. Yeah, thanks for your showing us what are the conditions on the markets for today. So yeah, thanks again for all our ladies and gentlemen who join us here today. We're back tomorrow at the same time. So are also invited for this webinar, and you can also check our website for other webinars if you like. Yeah. Thanks on everybody. Have a good time, good trades, and we see us soon. Bye bye.